Greeting and welcome to another live session. If you guys cannot hear me, can you let me know? If you can hear me also, can you let me know so that we can begin another big trading day, second day of trading week. And I'm really excited about this live session as NFP week. The market is slowly getting more and more volatile, and in this volatile market, looking for trading opportunity. And that's a pretty good move that you can look at here in this market. And this is a live trading session exclusive from Forex Trading Wizard Academy, and I believe that you guys are ready here for trading and making some peep that you do almost every day, except some day negative, but most of the time. We had earlier one trade that successfully closed, and looking for more entries. At one trade, this one, it was the sudden move, but we have closed in. This is what I focus on, closing in profit as many as we can. Thank you very much. Greeting, welcome. We can hear you. Thank you very much for confirmation. Market went crazy for a minute because Trump tweeted. Okay, so let's look at, we saw a sudden breakout, and I was looking at what happened. Okay, so there is a Truth Social came. We will be going through that. We'll be going through that one by one, because that made the market sudden breakout here. I was thinking because I was preparing for the live session, and we saw there was a sudden breakout. We'll be looking at, and this is another in the past I saw that even nowadays people trade only the tweet. Okay. Some people trade only the tweet. In fact, it's profitable, some trading on the tweet, because when there is a tweet, there is a breakout, there is a bounce. In fact, the market is actually mostly moved by the news. So it's essential to keep eye on the high impact breaking news as a fundamental and technical, as a fundamental and sentiment aspect of trading. But here we are looking at now all those factors we need to consider to trade the market. Good morning. Thank you very much for confirmation here. And we can see that, and I will be looking at here, first of all, how the market is trending. What is the aspect of the market that we can look at? And I was looking at daily chart earlier, and I'm starting with the daily chart. And once we see the market has shown the daily market structure, with this daily price action here, we are looking at, first of all, the trend. Now, I have already posted one analysis. If you guys looked at earlier, if you haven't looked at, make sure you subscribe to the channel and also press the notification bell so that you are not missing any of the content that I'm posting every day. So this is what you can see. This is the daily market drop back below of this daily resistance line that we have seen. The market drop to this support. This is the past week's move that you can see here. And with this past week's move, if you look at, the market drop to that key support zone. And now, of this support, there is a rejection, and the market didn't come back below to that support that we have seen. And with this move, if you look at the price action, it's now bouncing off that level. And this is what I was looking at. The first thing, though I solely do not trade on based on Fibonacci, but Fibonacci gives us a vital information about the current retracement level. So if you look at now, the market has 50% Fibonacci retracement on the daily. And what I think it's approaching towards the 61.8%, which is the golden ratio of the Fibonacci. The golden ratio is the nature's code to keep balance. If you look at the Fibonacci, we see that on trading, but it's interesting fact. It's based on the mathematics. If you look at 1 + 2 = 3. So this is how the Fibonacci series is built. And once you see that consecutive 2 number, add and get the third one and add the next one, you're gonna end up with another number, and use the next one, add the next one, and then you're gonna get another number, use the next one. So this is it's a logarithmic or the exponential. This is a Fibonacci sequence, which is, if you draw in a mathematical term, you can see this is called the Fibonacci, right, sequence, and it goes on and on and on and on until the infinite reach. So in that Fibonacci sequence, 61.8 is the golden ratio, and that's why it's called the nature's code. If you look at the sunflower, okay, fractal, pine cone, in even nature, okay, this universe also obeys the Fibonacci golden ratio, which is the nature's code to keep balance. So this is the level that is for 61.8%, which is golden ratio, and I think the market now potentially approaching to that golden ratio, which is the nature's code that we are seeing here. And because the market has reached that, is approaching towards that golden ratio, this is the daily chart. And probably, guys, for those who have a very good understanding of the candlestick pattern, we had the previous daily was, some people might say dodgy, but it's textbook middleman. Middleman is where you see a candlestick pattern has equal wick on both direction with a comparatively smaller body and breakout candles. So if you look at this candlestick pattern, if you know that hanging man, shooting star, these are some of the candlestick pattern name, which is easy to understand to define the price action pattern. So if you look at here, it has created this candlestick pattern, which is the middleman, and we can see that of this middleman, the market is now today pushing back towards that Fibonacci level, and of that Fibonacci level we could see what I think potential rejection or further correction. So here is to look at that level we are looking at now. So at the moment, what we can see that there is a bullish breakout here in that market, and with this bullish breakout, the market structure is showing that there is a potential for upside, and this is where we could see the market is potentially continuing back here to that level where there is a higher area of value. Now, therefore, from the daily, we can see some short-term upside bias here, and I'm looking at the 1 hour and the lower time frame. However, we will be also looking at the weekly perspective. If you look at the weekly market structure, there is a weekly long wick doji that you can see, followed by this week the market on the first session of the yesterday's trading, that means the first day of trading week, the market of this level has shown an upside bias, and of that upside bias, the market is giving it's a potentially an upside momentum here in that area. So, and I'm going to the 1 hour chart here. Now this 1 hour price action is very interesting. If you look at here, this is a dynamic support. The reason I'm, if you look at dynamic support is where the market creates a carved support. So you can see that it's a carved support. The price respected the dynamic support and rejected off this. Now this 1 hour, the current hourly candle is important because of this support. There is a bounce with the current. I think there was a post, and we'll be looking at from the sentiment where the market has gone up. It is key important, guys, that you always keep a complete understanding of the technical, fundamental, and sentiment. That's why you become a successful trader. Have you liked this stream? I'm waiting. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every day. Thank you. Awesome. Now we are looking at here. This is where there is a support. If you look at the market, this is a trend line of this support. Okay, and of this trend line, and with this trend line, there is an initial breakout from this, followed by this pullback, and you can see the market is now breaking back to the upside. This is the technical that you can see bullish. Now this hour, just now the market had a breakout of this lower time frame support here, and I'm looking at here the technically we can see the trend is up. Let's look at understand current sentiment in the market. Sentiment is key to look at where the market is heading back in this area. So looking at here, we had the post came out just now. There was one. Okay, come on, I'm not a robot. Okay, so there's because that was the first breakout that we have seen in this hour. All of those countries that can't get jet fuel because of the Strait of Hormuz, like the United Kingdom, which refused to get involved in decapitation of Iran. I have suggestion for you. Number one, buy from the US. We have plenty. Number two, build up some delayed courage. Get to the strait and just take it. You will have to start learning how to fight for yourself, and the USA won't be there to help you anymore, just like you weren't there for us. Iran has been essentially decimated. The hard part is done. Go get your own oil. President Donald J. Trump. So I think, there isn't any like ultimatum or anything like that. But what guys, the reason this gold has gone up, we will be looking at how the traders interpreted, because many of the things that we need to look at two perspectives. One is the concrete, that everything has two sides to it, right? So what I would interpret this one is kind of what I think he was a bit of upset about what mentioning here. Probably that's where the post has come out. And so what it carries is that, like, there are a few options, because there is a oil crisis and the oil is not coming on the way. So there are some options that he was suggesting, Donald Trump, and what we can see was a buy from the US. I think it's maybe for some, I'm not sure how it's gonna feasible or will be. I think that might be one option. The other one is build up some delay. So basically he was inviting, still there is a time to go and do something there. And so what Donald Trump was saying is that those whose ship is going through that Strait of Hormuz, probably they also have to be working on it. This is what you want to say. Otherwise, probably it's signaling that there might be the US might be leaving that place very soon, something like that, so that for those who will be stuck in that area in terms of the oil, probably they have to go and talk about it, do it, something. So this is what, like, kind of what I would say that, it's my personal opinion, is that he might be upset about some of the things didn't happen as expectation. By the way, now how does that has now influenced the market? Let's look at here. Now we see that as soon as this post has come out, there is a breakout on the market, and we see that gold has started to bounce off that level. So what that has also impacted, we can see that on WTI, which has gone a little bit of bearish drop here. DXY, we can see some kind of downside, but I see the DXY, guys, is still long-term bullish. But we see that there is a bit of downside move on WTI, slightly with this post, USD JPY as well. And this is a post that gold has bounced back to the upside. So this basically this post is giving a slight risk on sentiment. Okay, so that is what basically the gold has broken back to the upside. This is what I would interpret that way, and this is what for my experience, what I have seen that. So there is an indication of a slowing down of probably in terms of the what though it is going on, but there is kind of indication of withdrawing something, some kind of attention or action or some things happening. So that might be bringing risk on sentiment, and we see that gold has gone up. But as I mentioned, we don't know how it's gonna play out. But at the moment, as he was saying that means Donald Trump, that those whose oil is not going, they have to go and work for themselves. So basically, it's another way of saying that we are leaving that place. So you have to go and do it for yourself. It's still time. So that bringing some kind of interpretation to the traders that the market is going on a risk on sentiment. Probably that could be, or this could be completely the other way around, right? This could be that risk of sentiment. There might be something happening very aggressive later. But at the moment, we see that with this post, there has been a bullish momentum on gold. And with that bullish momentum, at the moment, we are seeing that there is a breakout. Few for last 450 minutes candle showing that strong bullish move in that area here. So therefore, if it is a risk on sentiment, stocks wouldn't be going up as well. If it is a risk on sentiment, then stock is going to go up. Okay, so anything risk on sentiment usually it goes up. What do you see on stocks? So let's look at the US30. There isn't much more on this one, but we see that there is a this hour, so it's up. So you can see that this hour US30 is up, right? So risk on sentiment usually put the riskier currencies up. So a simple way to understand. For those who are in the academy, you can go to the educational group top. So you can go to the Telegram top in the premium Telegram, and you can look at the details of the trade. So, but I'm sharing here the free Telegram link here as well. Each week we take some new members in the academy on Sundays from the Sundays Zoom session. So don't miss out to join that. You can stay connected to the free Telegram here, and then where I'm posting, I'm taking a Zoom session each Sunday, explaining every details of each ideas. Now, if you look at that, stock has gone up. So how do you interpret that risk on and risk of sentiment? We will be discussing here. It's very simple, just head and tail, right? Just head and tail. This way or that way. We'll be discussing on that later. Now, at the moment, if you look at this XAUUSD, we are just focusing on this instrument at the moment, and then we'll be looking at also, doesn't gold usually go down during the risk on sentiment? Yes. Usually on a risk on sentiment, gold goes down. Okay. But this time is different. I'll tell you why, guys. Risk of sentiment. Investors are fearful, uncertain. They move money into gold, government bonds, cash, or so gold usually. Yep. This time is different. This is what I was talking about. This time is different. Okay. This time because of the energy crisis. Okay. This time risk on sentiment is going to the energy. Okay. So the reason is gold is, if you look at that, it dropped a lot, right? Now with the current, this is for this war, the risk on currency, we see that it's just going the other way. this time. The reason is currently energy became very, very important instrument. Okay, oil, and especially oil, right? So what happened is that, why did the gold has dropped? Let's understand it. Though it is a wartime, usually in wartime gold become very, very volatile and high. We see that gold is volatile, but there is a short-term drop here that you can see on gold, right? We see the DXY is going up. Now, this time is different is because of the energy. Okay, let me give you another understanding of this, guys. Very simple. Let me tell you. Usually, risk on means that there is higher growth, right? But what happened this time is that due to many energy infrastructure being impacted, especially if you look at that Strait of Hormuz is a matter of concern that just came out as a post. So when this happened, many of the trades and investment has gone to the energy. Okay, so what happened is that whenever there is something coming that is easing, okay, that easing is easing the oil. You see that oil is easing, oil is coming down. So when oil is coming down, which is going to the gold, is going up. All right, so this is what the dynamics created in that way. If this matter is not about oil, then you could see that gold is remaining still an upside. And pre-war gold was pretty volatile. If you looked at pre-war gold was absolutely bullish, and that you have seen that. So therefore, at this moment, we are looking at here in this context. Context is very important. That metal was in a pullback. Now it's trying to break back to the upside. And keep in mind, traders, the market is very complex structure, right? Because there's a lot of factors involved for the market to go in one direction. And that's why the only thing that you need, that's why you cannot fully rely on the sentiment. You need to combine the sentiment with the technical, with fundamental, with support and resistance. That's why this technical analysis is crucial part of trading, is because you want to make sure that you are aligning with the technical, because the technical chart is where you will know that what actually most traders are doing. I hope that makes sense to you. Thank you very much. Risk of sentiment. Yeah, fearful or uncertain. Absolutely. They move money into gold, in government bond, cash. So now it's going to dollar index. So if you look at dollar index was bullish. So you can see that this is where dollar index is coming. If you look at here, it's breaking below, and which is pushing gold market up. Now, therefore, with the current post here, we see there was entirely a strong breakout. Now, we can look for buying opportunity on gold on a pullback or on a retest. Okay, this is what our plan. So this is an order block that you can say smart money bought off that level. How do you know the smart money bought, guys? When you see a move like that with an order block, that's a smart money in the market. Remember, how do you know that it's smart money? Very simple. If all retail traders trade all together, the market may not move even in one candle. It has to have the smart money volume in the market. So when the market moves like that, there's a smart money move has come in place. So therefore, we can trade with the smart money. We can trade in the direction of the smart money. Here's the 4-hour resistance line, the daily high, as the market has shown significant bullish move here. In this area here, I'm looking at some upside bias here in this market. And let's wait for this, because there is a breakout. We might see now breakout structure. This is the current key level. That means the previous support area that I'm looking at for a breakout structure, and that is what we will be looking at entry. All right, so I hope that makes sense to you. Thanks for joining. Make sure you give a thumbs up and also subscribe to the channel. If you haven't done yet, press the notification bell so that you are not missing any of the content that I'm posting every day. Also stay connected by joining the Telegram, which is the free Telegram. I've shared with you the Telegram link here, where you can access many of my trading tools, regular update, as well as the trade analysis that I'm posting every day. Awesome. So you can see the market is, this is the current support level, and for us this is our trading plan at the moment. Because it has shown an upside momentum here, we can see the market may eventually go back here to that resistance line where there is a higher area of value. And with this upside move here, I'm looking at for another break below, and with that break below here, we'll be looking at entry. If the market breaks to 4568 or below and showing a rejection, we'll be looking for a bullish move back up here. Are you guys with me? And off this level, if the market come back to this key zone, of this key zone, we are looking at an bullish entry back to the upside here. We are looking at here for this break below. And once we can see the market has broken back below to this key support area, we will be looking for this support. Below this level, there is a high liquidity. The price moves from liquidity to liquidity. We are looking at here for this support for the market to break that zone, to grab the liquidity, and then to give us that entry opportunity here in this market. Have some music on while the market is coming down, and we'll be looking at that entry. And share your trading plan today. What do you think? Which way the market is potentially be heading? Any other breaking news? So here is what you can see in this area, that the market may come back below here to this support. And with this drop, if the market coming back here, we will be looking for entry. This is our primary plan here. And keep in mind, traders, it is important that trade your plan, plan your trade. That's the key to become a consistently profitable trader. Gold weekly candle was very bullish last week. Also expected this week's candle to close bullish as well. Look, if we look at the weekly here, we can see that on Monday, that means yesterday, initial drop and the market has gone back up. Now, this week's candle could be bullish, closing as a bullish, or it could still can close as a bearish. Now, depending on next move, that is what is happening. Now, if you guys keep in mind that if energy is going up, okay, later, if energy, so far we can see that upside here. If energy is going up further, we might see the downside on gold, okay, or sideways, or both can go up depending on where the current crisis is staying at, or it might move in a sideways. But one thing can happen from the technically, what I can see here is that if you look at the previous week, there was a doji and the market has crossed this doji, right? And now it's pushing back down. So there is a higher chance for the market to retest this weekly low before the weekly close. So you can expect a rejection again. And yeah, there is a potential, because there was a, here if you look at, this is a massive drop from the weekly back to back 4 weeks. So the market may not go straight like that. Instead, it can go up and can come back down up for another retest, and that drop might bring that market back further below. I'm also not, like avoiding the possibility that the market still can go up. As I mentioned, this move also now highly charged by the current geopolitical events and the upcoming news. So from the technical, this is how we can see. From the fundamental, we will be looking for more how the sentiment is playing out. I'm dropping the volume, not on the market but in the music, so you can hear and have a discussion. Now, the current level that looking at here is at this support level 4568 or below, and that is what you will be looking at for the entry in this market. Okay, so here is this drop that you can see, and you want to see that the market is coming down to that support, which is an important area of value. And of that support, if the market drops well below, because there is an imbalance here, I always look at the imbalance in the market, and that is what we will be able to look for that entry here in that market. Ready for an entry? Make sure guys you use a risk manager tool, lot size calculator for entry. And there's a 1 hour candle close coming as well. If you look at this 1 hour candle close is important, because with this 1 hour candle closed, we will be able to see how the market is potentially performing here. And are you going to see another move, or you could see that pullback here? And that's key to look at. Usually if you look at this order block, it is where the market usually get a stronger rejection, because this is a trend line, and you want to see the market has tested the trend line properly before it bounce back to the upside here in this market. There's a pretty bigger bullish engulfer has formed in that area, and now with this initial move here in that area, this is a key support, and we can see that with the candle close, the market is trying to break above. It started to bounce off this level here on the 1 hour perspective with a bullish engulfer, as it has shown that there is an initial breakout. So therefore, looking at here in an upside momentum. The previous trade that we have opened also I have shared in the premium group, also from those levels that we were discussing. Let's bring that up here. If you look at that, the first trade that we have opened. Usually all those trades that you open is in the direction of the trend. In that area, we have opened the position here. Now, when the market has broken this support, if you look at, there was a stronger rejection of this support level. That is where the buying pressure has come. Usually, this is always a good idea, is to look for a false breakout. Now, this is a key support area, and from that key support area there was a false breakout and the market has rejected back to the upside. To trade with the trend, there are three things that the most important part to look at for each entry is to wait for the market structure to break. So if you look at here in this drop, how do you see how the market has rearranged itself? This is the support, and there was a break of this support of this, followed by a stronger rejection of that support. The market has gone back up to that level, which was showing that there is a rejection, and the price started to bounce off that key level. And this is where our entry. And the same trade also I have sent out in the group. 4560 was the entry level that we have entered. Now, the reason the entry was at this level, if you look at, I have already also shared one analysis and also the previous discussion. Guys, this is really, really important stuff that will change the way you look at the market. If you look at here, you can see that here is series of lower high. Now, how do you understand in when the market will have a breakout? Either you are trading on XAUUSD or on anything, you can look at those trades. So if you look at the market is in an in a trend and then break below, it rejected back to the upside from a consolidation, highly likely it's gonna break back to the upside, okay, because this is the liquidity sweep. All right, so with that liquidity sweep, if you look at here, you can see that here is the liquidity gap, and the market has gained that momentum of this level, and we see that in the past the price has broken out of those support level multiple times, and now it has created an imbalance in that area, which is if you look at the series of lower high, that's the imbalance. That is where you found that liquidity gap, and the market has broken out of that level. Very high probability trade, and more often you're gonna see that the market will play out in that direction. If you are trading for some time, you understand what I mean. If you don't understand, then don't miss out to stay longer here in this live session. You'll be able to see that exactly how the market is playing out and how we can trade those instruments based on that. Now here is with this support, again the market is breaking back to the upside. Welcome. Okay, we saw the market didn't drop to that support. Instead of this level, it rejected back above here. And because the market has got back to the upside here, we are looking at entry from this important area of value, which is where you want to see that entering from this support. Okay, with a multiple liquidity sweep here, this is what we are looking at here. In the meantime, we have too many lines that I would like to delete all of them again to refresh, to look at from the fresh perspective. And that's a beginner mindset that I always look at here. You know, time to time update the chart, like updating everything. So here is the market has come back to this support. We might be able to find an entry shortly. This move that you can see here, it's against the trend, and I might enter by market with this move that you can see. There is a break below that might be bringing potential entry opportunity. All right, so there is a drop. How many pip here? 104 pip, and I'm looking at here for this move potentially to come back there. Okay, so I will be opening here a position buy, and I will keep the stop loss below all this low. Guys, make sure that you always use a lot size calculator. We'll keep a little wider stop loss for this potential move, not too wide. The most important part is to manage the risk accordingly based on the lot size. How many pip is not a factor. The factor is, are you going to look at so I open buy, and I'm sharing the same trade in the group as well. So buy by market, and we'll be discussing in depth. So stop loss placing at 4570.55, and DB target setting at 4609.46, and this is a buy trade, and they're expecting the market to respect this support and then to return back above, as this is an uptrending market, and there is some kind of long wick candlestick pattern. The price still can come back down for another liquidity sweep here, but I'm looking at here for a possible rejection of this level to the upside, even if it breaks below. In case we get the downside here, we might get, if we get a stop loss, then we will be looking at entry from this support again, and this is the second plan B. So always keeping two plans is best idea. The 15 minutes candlestick pattern, that if you look at, this is creating a candlestick pattern, and if the market goes up off this level, that we could see, I'm going to go long straight away. We'll be taking the profit once the market will cross this high, partially or fully. 140 pip will be a good move if the market shows that move back to the upside here in that market. Let's keep up. Always keep a risk management plan. That's the key to become a better trader. Here's what you can see. Come on. And in the meantime, if you're enjoying the live session, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I'm posting every day. And with this breakout here from this support, now you see there is a break below, and that could be the market is coming down here back for another retest. Hit some downside. I will not move the stop loss. Let's wait to see where it's heading. Had a tight stop loss. This is where the trading is. Let's keep it tight stop loss. Okay, so a bit of bearish rejection here, that to see what the market is trying to do. Might break the support. If it breaks below, we'll be out with the trade, and we'll be, once the market will be crossing this low, I'll be re-entering again for another move. Rejection here. Okay, if it reject off this level, that's gonna take that market well above. However, if it breaks below, coming back to this fair value gap, I'll be straight re-entering again for another entry. May straight come back down up here, or could reject down back below, depending on how the market wants to do. It's an usual breakout. Looks like it's getting some rejection of this support, and that might take some upside bias here back above. Is ready for this ride. So here's the move, and with this movement the market is now okay. We get that reaction back above here. This is what I was waiting for, this potential move back for another new higher high, and you can see the market is showing up that pattern. And thank you. Okay, so we can see that off this support, it's getting the reaction back above, and we can see that it's almost nearing to the entries. This is also another advantage of having a smaller stop loss. You know, if the market goes in your favor with a smaller move, we can take significant amount of pip. That's the beauty of having a smaller stop loss. Now here is the 5-minute candle closing. And you want to see that it's closing as a bullish engulfer, stronger green candle that could drive that market back above, potentially to create a new higher high, at least to go back to the resistance line, will give us almost 140 pip. That's what I want to take here in this move with all of you guys. If you're with this trade with me, say yes in the live chat. Thank you. Coach, are you in trade already? Buy? Yes, I'm on the trade, and I'm already buy trade, and also I buy that trade. Let's look at that here. The market might drag up here for another new higher high. How many of you are with this trade? Okay, now this is the biggest part here. If it is creating a large head and shoulder, we might see that drop, but I think it might not create that head and shoulder. You can see there is a support test, chances for another move back up. However, anything can happen. It's trading, and that's what makes big difference. Okay, so here is the market is trying to crack that to the upside here. Okay. How many of you on this trade? Say yes if you are on this trade. That's cool. We can see that rejection up. So we look at in the meantime what's happening around the world. Okay, so here is the last move that we could see. So the market, the candle here on the 1 minute has closed above this level. Let's see that if it is creating a new uptrend here. Okay, so move pullback. Are you going to see another new higher high? What's your bias on gold? I would like to start with a pull. Thank you very much. I'd like to start with a pull. What is your bias on gold today? What's your bias on gold? So I've shared a pool, and interestingly, almost 90% of the time the pool has come out to be correct. So probably guys, casting a vote, basically giving the market a direction. So don't miss out to say that cast a vote on pool. So it's going up now. Okay. This price action is quite important because you would like to see that this one is closing as a narrow red doji, which will give a momentum for another bounce back up. And I see there is a potential for move up. At least you can hear me. Come on. Okay, so thank you. We see 90% bullish. That's cool. Let's wait to see for this market to eventually break above. It's cracking back above here. This is what you can see. The market is of this support. It's moving up here to create a new higher high, and that is what we want to see, that the market has got that reaction back above. And if it doesn't, then probably you would see the market is coming to this liquidity zone here. then you won't be able to see that here in that area. So you could see, let's wait to see where the market is heading. And breaking out, showing up that pattern, the potential to go up. Patience is key, as I mentioned earlier. When you wait patiently, market more often will go in your favor. This is in the last, there's a 30-minute candle close coming, and I will be waiting to see how this candle is closing. Candle close is important because this is where you will be able to see how the market is going to do with the closed candle. Is it going to go up and create a new higher high? See that reaction back below. Pretty long week doji that might trigger that price back up to boom. That's where you can see that there's a rejection coming, and that is key. Are you guys ready for taking profit if the market goes up, which is we could see? Because the market has gone a bit of extended consolidation, I will be happy to take profit at 100 pip if this market is going up here with the candle close. There's a green bullish candle formation here, and we have seen there is a 30-minute candle close coming. If this one is closing as a as a doji or even a green doji, we can expect an initial upside here, and in that case I will be exiting this trade with 100 pip and nearly. We are running the trade. For those who have joined, just we are running a buy trade. I'm updating in the chat option. Okay, so you're running a trade here and looking at in that area for another wave of bounce here back above for another new higher high. And we can see the market is evolving back above where we are looking at that here I'm looking at in this area for another bounce here back above, and with this bounce back above that looking at in this area for the market to create a new higher high. Okay, so very interesting narrow consolidation structure in this area. Just enjoying the music here. Come on, it's breaking back above. It's crossing our entry. Just enter to our entry area. Soon as I'll be closing, also I'll let you know guys here. This is the second trade will be, if we can successfully close in profit, 2 trades gonna be successfully closing in profit. 2 trades not bad in a day. You know, I usually prefer not to over trade. It's trying to break above. If you look at this, is 1 hour price action, which is forming a doji here in that area. But I think the market might revisit 4593, right? So 4593 could be an important level that you can look at for taking profit. 4593 will be 95 pip. Are you guys getting my point? Do you think 45993 will be good area to take profit? Share your thought, yes or no. I'm still holding on to this trade for taking profit in full. Don't you think 4593 will be a good area to take profit? Say yes if you think so. Then you can take all profit together. Okay, so I saw one Robertson. Anyone else? Anyone else going to say yes? Okay, so anyone else? Yes. Dark. Okay, anyone else? Yes. Irfan, anyone else? Kevin, yes. Anyone else? Can see that bit of pullback, and I would still look to hold on. So there was significant move happened, almost 57 pip. Babaya Thana, I'm in sell. I think we may drop 4, 5, 6, 8, then break out more NY session. You're on sell. Okay. There might be some downside, but at the moment, as if you look at here, this is initial bounce of this, and okay, it dropped again. It's unusual drop back to our entry, but I'm still holding on to that. I think 4593 is an ideal level to take profit. We see that there is still 20 minutes for this 1 hour candle to close, which is potentially be forming a doji. Thank you. And yeah, so we see some upside bias trying to come up. Sophia, yes. Okay, thank you. Okay, so interesting move here at the moment. Now, when we enter the trade, what did we look at? You know, this is where I always focus on that. Not only to trade, but also to trade, right? Not only to trade, but also to learn and grow and understand the market movement. So if you look at all those strategy here, we trade all those education. Probably you guys have not seen here. the education here is very different because it's long observational. Observational knowledge is what makes a big difference. I had hours of time spent in front of the chart to see that how the candlestick pattern form, how the market does, and in fact what is the correlationship with the timing, market movement, news effect. Now you won't find anywhere any university or education institute will teach you scalping or day trading, right? You might get some that education out there for how to read the chart, but some of the things that will never tell you anywhere. Let me tell you what it is. Have you heard of it? So let me tell you one important thing. If you see that, you see more often the market before the NY session closed, if you look at 2 hours early before the NY session closed, if daily market moves a lot and the price started to drop from the top after an extended move, creating red candle like that on TradingView. You see, these are unconventional education. If you see that all those red candle forming like that, breaking out from the top just 1 or 2 hours before the NY close, and all day long the market moved up, this is a very high possibility to drop here, especially when you see the market creates this kind of candlestick pattern. This is a time related trading. You can only find during the timing what context you can use it. And as we look at the TradingView chart, okay, let me tell you another technique. So if you look at an uptrend like that, okay, going up, and suddenly the market has broken from that trend, okay, and in that break, if you see that a red candle form like that, few red candle, 1 or 2, when the market is breaking out of the trend, and those red candles doesn't have a wick at the top, that means as soon as it opened, it started to drop. In 90% of the time, you can expect this market to go ahead and fill that zone because there is a liquidity left in that area, because it's a downtrend, it's an uptrend. The market left that zone imbalance. Look at this one here, the same opposite. This green candle formed without any wick at the bottom, right? There's no wick. The market dropped to that level again before it going up. Same thing. So it was in a downtrend, but when it was going, it left a gap here. That in most of the time, you see the market will come back to fill that gap in that area. More and more time, it's gonna do that. Okay, now here with this 1 hour candle close from the 30 minutes, is rejecting of this. And So this break below can be a way of liquidity. So you see that the market has left the same thing. There is an imbalance here. It left a gap here, right? The chances for this market to go back again for another retest is higher. Though it is not from a strong uptrend, but still there is a higher possibility. This is left this one as an imbalance. Okay, now with this break, you're looking at here, we saw that in our direction the market moved to nearly to 60 pip, return back. When you target for the bigger profit, sometimes it is important that to wait for the market to give us that directional bias. We might be changing the trend here. I won't be okay. I will not be hesitating to see the market might be coming further down. If it drops down, I'm okay with that. We will be re-entering again if we need it. We can take the smaller profit. We're out. Okay. It just has tested that lower part of this move. And when you target the bigger profit target, sometimes we need to be a little bit of patient of that move. And okay, here is with a doji. See where it is heading. This is an order block here, and it eventually can come back here. Before we re-enter, we will be re-entering again, but you want to see that the market is giving another possibility here in that area. Now with initial bounce here that you can see, the market has again started to come back to this support, and there's a double bottom. The current session high is here. Welcome. Let it come further downside here, and I think that there might be now a retest of this order block. Could take that smaller profit, but I prefer to take bigger. Of this support, see, this is the 1 hour candlestick pattern, and where the market is not going for a bigger trend, so we cannot target a very large move. But if we see that enough confirmation, we can look for this short-term move here. I'm still bullish. I'm looking still for buying opportunity. Might be able to look for another entry along the way once it is showing up that pattern, especially if there is any. I hope there is no breaking news here at the moment. Okay, so there is another update has come, I think shortly. 30 minutes ago, the US is not pulling assets in a Strait of Hormuz yet. CBS. Okay, so with a narrow candlestick pattern here, I think it is a bullish confluence. I'm looking at again long, keeping the stop loss below and targeting to this move potentially as the candle close coming. So around 95 pip, and I'm looking for this buy here. Expecting it to, with the candle close, the market to break back to the upside with a smaller risk. Putting 4567.40. Now you see that I put a very tight stop loss again, only 77 pip, because if this market breaks below, I will not be on the trade. I will only taking this trade if the market goes up of this level. That means I'm looking at this one as a potential order block, this narrow red candle. This is what I opened that position here. So as in 5 minutes time, if you look at, there's a 1 hour candle close coming, and that's the basis of this trade. If this 1 hour candle close pushing that market back above, and that might be bringing some upside bias. However, if the candle close below, the market drops, you will be exiting the trade with the minimum pips. And you can take any time with next trade, again, back again. That's how the trading is, guys. Always keep your risk low and then look for the best entry. So here is if the market breaks this support below, that's what you will be looking at for the next entry opportunity here in this market. Thank you. If it is breaking below here, breaking this support, we'll be looking at this market to eventually, if it is breaking below, we'll be looking for, we'll be waiting. But here, if you look at, this is the 1 hour candle close coming, and that's a very high probability entry here in that market. So if this 1 hour candle close above, the market is pushing here back, that's where you want to see that the market is going up in that area. Thank you for joining, and still long way to go, right? Just the beginning. It's just the beginning, or it is ending. There is nothing, guys. Everything is in the middle, right? If you look at this circle that we discussed, the Fibonacci, if we looked at the Fibonacci, there's no beginning or there's no ending, only in the middle. So with this narrow candlestick pattern, now if it breaks below that, we might see that the market is going further downside here. Come on. So 3 minutes still remaining for this candle to close. Thank you. All right, so here is a long wick candlestick pattern that you can see in that area. So with this long wick, you see this, it's trying to break up. Trading is sometimes a little confusing, not little, largely confusing. You see that your brain might say it's going down, but it's gonna go up, and it's gonna go up. You might say that going down. So that's why understanding liquidity is very important. I do sometimes have completely confused, which is happen in trading, and it's a part of trading. The goal here is to keep a high win rate. Most of the time, if you look at, we go with our trades in the direction we had earlier, bigger profit target, and now here goal is to go for a break-even move. So if it goes up here, candle close, and looking for, see that there's a candle close coming, and they're successfully going back up here, and also there's a 30 minutes candle close coming, which is potentially being a doji. 15 minutes also becoming potentially a doji. I'm holding on to that for this possible move back here upside to create a new higher high. All right, so let's look at here. Cool. I'm still holding on to that, guys, so to see that if this move taking me to the top, 40 pip and 45 pip, there's a double bottom. I want to see that going up here. to let the market do, especially the liquidity sweep here. And okay, getting the reaction of this, and that's what this market is trying to do here. It's going for an extended consolidation. It is coming down. It's gonna be interesting here. And there's both advantage and disadvantage of a smaller stop loss. And still on it, guys. So this is I'd say that unusual move, and that could, we see there is a 5 minutes candle close with a big red candle, and that might bring that market below here or could go back again. And this kind of market structure sometimes little unusual here, and approaching towards this resistance line where we are looking at in this price action to give us that potential entry back to the upside here in that market. So here is the price action of this support. If you look at this 5 minutes, which has formed a bearish engulfer, the market is trying to break above here that's going back to the upside here and crossing our entry. I'm still in both trades. We gone to this decent amount of profit, but I didn't take it because you want to take a bigger profit target. That's what I'm looking at here in this market. And with this liquidity sweep here that I'm looking at in this market at the moment to create a new higher high. And if the market going back here for the new higher high, we are looking at for this move to go back to new high. So the market reached that break-even points, but I didn't go for it. Let's wait to see where it is heading. Now, this might be a potential downtrend, or we could see again starting another uptrend because the market has broken below this flag pattern, and from this flag pattern it can go back again to the upside. Here is the 5 minutes bullish engulfer, moving that up and potentially to cross that high to create a new higher high. There is a bullish engulfer again on the 1 minute chart. The price has tested this support. They're expecting this market to respect that and to create another bounce back up. Now the effort here for us to go for a break even for this session. Now we had a previous session on our London session. We had a successful entry and we secured that one with good move. Now this one I'm looking at for a potential break even. You see that bullish again. I'm still holding on to that. Going here back above. Awesome. Going back up, and you can see the market is creating this upside 50 pip up here and looking for a new higher high, looking for this market to go ahead and going back to the profit target. Welcome. Are you guys with me with this trade? So yes, if you're with me, this is exclusive live session from Forex Trading Wizard Academy. Also join the Telegram. You can find link below this video. That every week on Sunday there is a Zoom exclusive Zoom session where you'll be also can participate for the lifetime access mentorship program where you can get access to all my trading tool indicators as well as the strategies. I've shared the free Telegram link in the description. You can use this. With a bullish move that you can see the market is going up, and let's wait to hold on to this trade. I think there is a possibility for further upside. I'm still holding on to that. So they had a full profit target hit. One more move back to the upside can be good entry, good move. Okay, I will be exiting this trade now, guys. I'm out. I want to take this move back again. I've been out with this one. Got around 77 pip. Okay, got out with this one. I'm out. It may carry another buy. Yeah, it might be. But this is a very crucial level that I have got out with this trade, and I would like to take this one here because the market is in this area little, if you look at that, unpredictable here at the moment. With a bullish engulfer, it may create another move in this zone, and I'm looking at here for this move back above to create a new higher high. All right, so we are looking at, if you look at this is a move, and we can expect this market to reject back again to the upside. This might be doing here, if you look at. Some music on. Lower high, yes, this is what you can see. Four, five. The market might, yeah, there might be sideways movement a little more. I would like to delete this zone here. We might see some sideways movement. If you look at here, you can see that with a bullish engulfer in this area has formed, followed by this pullback, and this is the 4-hour bullish engulfer. It's not showing still a stronger bullish confluence here. The market, if you look at here in the past, there was a rejection from this resistance line, and the price is struggling to go back to the upside here. So what you could see that if you look at the daily, and from the daily after this middleman, the market has pushed back to the upside. This is where, as we discussed in our previous analysis, this is where the golden ratio of this Fibonacci, 61.8%. The market might respect that and could reject from that level, and that might be one possibility here in this area. And at the moment it's still maintaining this uptrend, and we are looking at here in this market to show up that pattern back above. All right, so we are looking at the moment for, as the market is, if you look at from this support going back, and usually in those zone here we are seeing that possible bullish bias might be going back to this key zone here, and I'm looking at in that area for another wave of bounce. There is a doji, and with this doji they're expecting, this is the 5 minutes price action. Here I'm looking at it might try to push back again. Okay, so of this zone that we are looking at from this support, as it reached that high, what is in the next here, in reset move, with a bullish engulfer here in that area. The 15 minutes price action is showing that there is a potential upside bias, and we can see the market is in fact creating that structure in that zone. And this is what I am looking at, guys, here. If you look at the lower time frame market structure, signaling possible further bullish momentum here in that area, and I think could go down to 4546. I still see that there is a higher possibility to go long. You know that how I, not only me, every professional trader look in the same way. If you look at here from this support, you can see that this is an initial move, right? From this support to that, and then you can see the pullback. Guys, that's all you need. Okay, look at the segment. In fact, this is how you need to understand the universe, right? You can't look at the whole thing. It's impossible. You can't grasp the concept of infinity, right? 0, 1, 2, 3, and then you keep going. Where you gonna go? It's the infinity. On the minus side, -1, -2, and then go to the infinity. So you need to look at the segment, right? Otherwise, you look at how the market looks like. It's a random chaos everywhere. So what you need to look at here is the segment. Sometimes it's called the whirlpool, like our thinking also like that. According to science, a human being thinks 70,000 thought in a day. How many you can remember? So you need to look at the segment, and at the same time, in this 70% of the thought, 90% of them repetitive. That means what we have thought yesterday, 9 out of 10 is today same. And that's why you'll see that everyone, most of the people experience the same life every day in the same way, because this is where that generates everything. All right, so thinking, acting, and feeling, that means emotion. These three things creates outer experience. When you change this, because we are mostly taught to change externally, which is very hard to do that. You need to create a lot of big action to create little change. It's like a big block that you need to push harder on the rough surface. It's the Newtonian in physics, right? From A to B. But you can do it easy way, right? The easiest way is to become. And that's why instead of doing and being, when you can create a balance between doing and being, you started to see things moving very easily. Okay, now this is what you can, as a trader, can do the same thing. Because trading is hard, especially the emotionally. And if you want to create that emotional resilience, be a trader. Trading will help you, because this is where you experience that emotion and then let it go. It will create a much more stronger, resilient mindset that you also can use in other areas of your life. So that's where being a trader is helpful. Now, how can you, that's why I also invite you to watch the live session, guys, every single day. Here, not only you'll be trading, but also you'll be learning how to master trading psychology, right? You might say, okay, I do other things. It directly will influence other things as well, because our brain cannot understand difference between this and that. It only reflects. For example, if you are building a muscle on a gym on your right hand, it also building a muscle on your brain, and that's gonna also help you in other areas of your life, because it creates a muscle memory, a connection in your brain that reflect every aspect. So therefore, here we are learning to develop, grow, evolve as a trader, and also in other aspect of life. So don't miss out. Also, you can upgrade your skill and also be part of Forex Trading Wizard Academy. Don't miss out to join the free Telegram link here, where on Sunday I do organized an extended Zoom discussion session. From that session only, we take few members based on availability in the Forex Trading Wizard Academy. So here is the free Telegram link, where I will be directly hosting a Zoom session on Sunday during the London session time. So you can stay connected there to get that Zoom link, that you can also be part of the academy once it is available. So that being said, we just started this session in 2 hours. Now I'm still be trading till the end of this NY session. We had 2 trades, 1 winner, 1 loser. Earlier we had 1 trade during our London session was winner. The goal here is to keep high win rate, high pips, so that we keep growing as a trader. This is the second day of trading week. Coming up also another 2 days. This is NFP week, guys. NFP week is the biggest week that you can look at as a trader. So don't miss out any sessions that coming later. And here my plan later today on gold, and also quickly we'll be looking at what's happening with the USDJPY and DXY. DXY having some downside move, which is what I think that potentially a deeper pullback, and that could create a new momentum here. Or if the sentiment changes, it might go for a bigger move depending on where it is heading. Thank you very much. Should like Okay, yeah, thank you for that. Okay, so here is what you can see in this zone. This is where the market structure is going back up. USD JPY, that the market is trying to break up here. GBP JPY also. Okay, let's see that where it is heading. And few instrument, we can see the DXY is coming for a deeper pullback, while we are seeing that gold is pushing high. USD JPY also currently showing the short-term downside, and I think this instrument as well might be potentially going for another wave of bounce back above. So therefore this drop, because it's a long-term uptrend, this drop can create a new trading opportunity, and I'm looking at here. Also posting analysis in few hours, so don't miss out that. Also there will be vital information how you can trade later today. That being said, thanks for joining, and I'll see you again very soon, shortly after trading, with another update. Thank you for joining. We'll see you again very soon. Have a good day, and also keep your profit in your trading account. Until that.